back on MorningLine. Thanks for joining us on this Monday. Somehow she makes taxes fun. I don't know how you do it. Maybe it's just the brassy hairdo.
That's it. It's the hair.
I love it. Anyway, Dr. Friday is with us, tax expert, and the number 737-7587. If you need some advice on how to handle your taxes, call in. We've got a few on the line and a few lines open. Let's go next to Ann. Ann, good morning.
Good morning.
Hey, Ann.
Because of multiple illnesses and the fact that my insurance doesn't cover a lot of the medicines that I take because the illnesses are deemed, the medicines are still deemed experimental.
Okay.
Even though I have good insurance, I still pay by the end of the year anywhere from $4,000 to $8,000 out of pocket for prescriptions, and it varies.
Sure.
Is there a way for me to use this on my taxes?
It's difficult. Let me be honest with you. May I ask your age or ballpark?
58.
Okay. So you have to have 10% of your adjusted gross income, plus you have to qualify for itemizing. So bottom line is it's difficult because if you're paying $4,000 out, you have to basically you have to have $40,000 plus the which is actually it's like the $8,000 to even get $4,000 in deductions, and you have to itemize, which is almost $6,800. It's not easy to use medical any longer to actually itemize. Your best bet would be what we consider when we consolidate, which we go every other year, which basically means is that you take your medical bills and you get them onto a payment plan. Maybe you put them onto a credit card, and then we pay the credit cards every other year, and we'd have to sit down and map it out because I know you need your prescriptions every month. But there are ways that we can do that where basically instead of having 8, you'd have $16,000 in one year and 0 in the next year. And by doing that, we're able to actually kick it in where you might actually get at least $8,000, which kicks you into itemizing, and then your charitable contributions, mortgage, interest, property taxes, if that applies, could all maximize, because otherwise it's just very difficult, especially for someone that's on that line, because even though it sounds like a lot of money when it comes to taxes, and I'm assuming her income, I have no idea what her income is.
You're on a fixed income, right, Ann?
Not really. My husband still works.
Okay. I
have recently retired, so it varies.
Yeah.
All right.
So, but I'm just saying, if you're making $100,000 as a combined couple, keep in mind you'd have to have over $10,000 to even kick in $1 of deductions. So it's just very, very difficult for an average middle-class family to take medical any longer.
Okay.
Sorry.
Thank you, and it's a good question.
Yeah, it's an awesome question.
Worth her thinking of that because she pays that much and wonders.
The other side of it is to get an HSA. Because HSA accounts, health savings accounts, I don't sell insurance, people, so don't call me on it, but I'm just telling you it's done with pre-tax dollars. So every time you use your health savings account, you're doing it before you pay taxes, and you deduct it before it comes out of your tax bill. We don't have to itemize. We don't have to do
okay, but usually, and I have one of those through my work here.
Sure.
And but that's usually where you get HSAs, right?
Right. Well, you can get individuals. I'm an individual, and I have it too.
Oh, you set that up, okay.
Yes.
But meaning you're self-employed.
Right.
And so you're able to put a set amount into your HSA every month, which is before taxes.
Exactly, and then you have a high deductible insurance that goes along with that.
That's exactly what I have.
Exactly.
The crazy high deductible, but hopefully if you're healthy enough, it builds and builds, and then when I need that appendicitis or something, I've got the $5,000 to meet my deductible. And that's what I'm talking about, a $5,000 deductible. Oh my gosh.
But that's all they can sue you for is $5,000, not $500,000.
Ooh. You're such a smart. You're so smart. Do you have a PhD? All right, let's get back to the phone lines. Next up is my friend Joe. Joe, good morning.
Good morning, Nick.
Hey, Joe.
Dr. Friday.
Hey.
Just a brief question. I was told that if you had employer insurance and/or Medicare this year, that you had to have a form from your employer or from Medicare or both to file with your taxes to show that you had proof of insurance to keep from getting penalized. Is that
correct? Everybody should be receiving a version of a 1095. It may be an A, B, C, different versions for different types of insurance that you have, if it's through your employer, if you have it yourself, or if it's through the marketplace. So depending on where you're getting it, but it's on a 1095, and everybody supposedly will receive one, even if your employer's insurance all the insurance companies should have them out before January 31st, is my understanding.
That answers this question.
Yes,
Let's
he's
before we
good.
go to the break, let's see if we can squeeze Mark in. Mark, good morning.
Good morning, Rick.
Hey, Mark, how are you, pal? What can we do for you?
I got a question. I was penalized for not having health insurance, but I'm a veteran and I go to VA. What can I do about it?
Do you have VA insurance?
I go to the VA. I'm a veteran.
Okay, but I mean, are you insured through the VA? I understand you're a veteran. I mean, do you have to pay the bills all yourself, or is the VA cover you because you're a veteran?
I just pay as I go.
You pay as you go. Well, again, if you don't actually, I mean, many veterans actually do qualify, and there is I can't remember the name, but there is a health insurance that they have through the VA. And if he has that, then he should get a 1095 and he be waived of that. Otherwise, just because you're a veteran, unfortunately, you might want to look into it. My opinion would be talk to someone at the VA and find out if they don't have a health insurance program that you can be a part of, because I would think it would be more beneficial than paying cash only, because like we were just teasing Nick there, but you know, if something really happens, you know, you're responsible for 100% of those medical bills, and that can add up really, really fast.
Yeah.
So you need to look into some sort of minimum care.
Okay, and remind me, if you would, how is it that the federal government knows whether or not you have insurance or not?
That's why last year they kind of didn't. I mean, apparently on the W-2, it does have a W on it if you have HSA. So you will have it on your W-2, so they get a copy of that, and they know that those people
Because
have
you have
health
an HSA.
insurance.
But if you,
or whatever type of, you may have a DD or whatever, but whatever your employer provides, it will show up on your W-2 now, all of them. But now if you're from a small company, they don't have to show it, but theoretically they're requiring the insurance companies to provide that document. And once that's filed, the 1095 is also filed with the government. So when you receive that letter from the government saying we've penalized you because of not having the insurance, and keep in mind they cannot charge you only a fee. They cannot charge you interest or penalty on that money if you did not pay it. They can only collect that money. So if you're going to have a bad thing, it's the best one you can have. It won't grow. But if you do have insurance, make copies of the document, send it to the government, and then they can correct their information. So
okay, but like you said, so they would find out then that the insurance companies then, it's
the
not
insurance
self-reporting.
company is going to be reporting to the government, yes.
They'll report it, and then they'll know. And this, again, is all part of the Affordable Care Act, where,
exactly.
you know, hopefully you go to the marketplace and find something, depending on whatever your background is, that's affordable enough for you to do it. And if not, there's some type of penalty. And almost all, have you had anyone pay penalties?
Oh, yes.
Okay, but I mean,
self-employed people are
But did they
known
say
for
they
not
went to the
doing-
marketplace and couldn't find something they could afford?
Yes, because many of them can't afford that $5,000 deductible, and so I mean that's and still pay $200 or $300 a month on the insurance. Keep in mind, it's partly, I mean, I hate to say it, but insurance in itself, because I'm lucky. I've been very healthy. So, but my grandfather was an insurance salesman, so I was taught from day one in the cradle, you always insured everything. You never know when that rainy day is going to happen.
Sure.
But a lot of people haven't been taught that, so they wait and wait until they get that bill, and then of course they can go bankrupt. I mean, I'm just saying, insurance hasn't been really a part of teaching people. You have to, before you go buy a high-end car, before you do a lot of things, insurance should be a part of your essential lifestyle.
Right.
Employers provide it for, like my father's generation, things like that, so they didn't have to worry about that too as a benefit. So anyways, so that's the kind of thing. But yes, a lot of self-employed people and their children and their wives are uninsured.
And it's not because they don't realize it's valuable. That's the whole point of insurance. You're insured in case something happens.
But they make choices.
They make choices, and sometimes it's cost prohibitive. Other times, if you're just thinking, I'm healthy, I don't need it, that's foolhardy. If you can afford it and you're not getting insurance, you're a fool, because it's gonna nail you sooner or later.
Sooner or later,
something's gonna happen. You're gonna slip on the ice and fall, or
you
whatever.
You don't need it. What's the worst that happens? That you had it, so you never had the peace of, so you have the peace of mind
that's
knowing
what it is too,
that you're not going to have to use it. And if you do have to use it, great, it's there, and you know. you're moving forward.
Okay. Okay, I thought we were going to take another call. Let me ask you this. What are the things, just as people go through preparing their taxes, that could flag them for an audit if they don't do it right?
Believe it or not, mathematics, people adding things up incorrectly.
But
and then
now, are they
reporting. So
good
under
enough at the IRS to look and say, okay, this clearly is not something that they're doing intentionally. They just messed
No,
up.
they don't care.
I know they don't care. I mean, doing it by mistake because you didn't know the rule is no excuse. But I'm just saying, they're after someone, that, I mean, wouldn't they send you a note? Would they audit you, or would they say, look, you made a mistake on the numbers?
They'll send you a notice that says, we've changed your tax return for these reasons.
Yeah.
And so, for example, you put in a W-2 and you transpose the number one direction versus the other.
Yeah.
Easy enough to do, right?
Yeah.
They'll catch it. They'll say, this is what we're proposing the change to be. Sometimes we agree, sometimes we don't. Sometimes
that doesn't mean you're necessarily going to be audited right then. It means
no.
They're going to send it to you and say, you owe this. That's happened to me, in fact.
They consider that paper audits, and that is an audit.
Yeah.
It's a paper audit, but
saying
that's
how
the
much
most
more you owe.
Exactly, and it's a friendly audit, I guess you would say, because there's really not a whole bunch we have to worry about with that, right? You correct it, you agree with it, whatever, you pay it, make payment plans, whatever. Then, of course, what really waives audits is changes, big changes. So let's say you sell a lot of stock. Something like that can trigger an audit from your standard type of lifestyle.
Okay.
You get a raise that's larger than normal. You have a big drop of income. That could cause an audit. Anything like that that's different from the standard, basically, of what you've got going on normally will most likely trigger, because audits are pulled by computers. Believe it or not, there's not some wicked person behind your tax returns saying, I want that person, I want that person. It's not that way. It's a computer basically crunching numbers and saying, yep, this is statistically going to be a good audit.
Makes sense. And they've been doing it long enough, they know what to look for.
Yes, and
That's the way it
they
is.
updated it about 2 years ago, making some changes. So that, just because things are different, husband and wife now both work. A lot of times people file married filing separately. Children, huge, because who's claiming these kids, right? You have his, hers, ours.
Yep.
There's whatever, and the kids can flip-flop on different returns, that kind of thing, and that can cause audits.
On that note, let's take a quick break. When we come back, more of your phone calls, 737-7587 on taxes. We'll talk to Friday right after this. Stay with us.